Members, good afternoon. It's the appointed time. We have a quorum. I call to order the meeting of the Bills Committee on Inland Revenue Amendment Tax Deductions for Leased Premises Reinstatement and Allowances for Buildings and Structures Bill 2024. Welcome, members. Agenda item number 1, meeting with the administration. When officials are ready, please take us through the bill. Afterwards, I will open the floor for members to ask questions. Thank you. Thank you, Chairman, and thank you, members, for going through the bill with us. This bill is rather straightforward. It aims to implement the following tax measures as proposed in the 2024-25 budget starting from the year of assessment 2024-25. That is to introduce a tax deduction for expenses incurred for reinstating the condition of premises under lease to their original condition, and remove the time limit for claiming annual allowances in respect of a commercial or industrial building or structure. I will walk members through these two tax measures. One, regarding the proposed tax deduction for reinstatement costs. Many companies lease premises, say office or warehouses, and when the period of rent ends, the companies need to reinstate the leased premises. In the past, capital expenditure could not be deducted according to the Inland Revenue Ordinance, IRO. But last year, while we were preparing for the budget, we heard from the industry that these are actually necessary expenses in the conduct of businesses. Therefore, we have decided to introduce the tax deduction for expenses incurred for the reinstatement of the premises. It's rather straightforward. We use a rather objective and lax approach. As long as the 4 conditions are met, we consider the tax deductions eligible. First, the person claiming the deduction must be a lessee of the lease. 2, according to the contractual agreement, the person claiming the deduction has an obligation to reinstate the leased premises. 3, the reinstatement costs, the amount of reinstatement costs claimed, is to be conducted or has already been conducted. In other words, the reinstatement costs to be claimed have been incurred. 4, the amount of the reinstatement costs claimed is reasonable in the circumstances. When these 4 conditions are met, the IRD will consider the tax deduction to be valid and eligible. In relation to the financial assessments, we have not assessed the actual amount, but we think the proposed tax deduction will not cause any significant impact in relation to the finance. Next, I'd like to talk about the proposed removal of time limit for claiming annual allowances for commercial or industrial buildings or structures. Under the IRO, a taxpayer who is entitled to the relevant interest in relation to the capital expenditure incurred on the construction of a commercial or industrial building or structure may claim an annual allowance of 4% on the expenditure. And the claims for annual allowances are subject to a maximum limit of 25 years or 50 years starting from the year of assessment. When one intends to sell the commercial or industrial building, there will be an adjustment conducted by the IRD. Following the adjustment, the buyer may not be able to claim annual allowances. That is to say, if the building or structure has already been kept for 25 years, we've heard from the industry that the existing arrangements may make it difficult for the buyer to buy buildings that are rather old. They may be less willing to do so. That's exactly why we have introduced a new arrangement. To the existing buyer, to the seller, there will be no arrangement, no impact on the seller. However, for the buyer, there will be a significant difference. Upon the passage of the bill, after the year of assessment 2024 to 25, for second-hand commercial building or industrial building, one can continue to enjoy an annual allowance of 4% on the expenditure. There won't be any time limit. We think this is a business facilitation measure, and it is worth implementation. All along, the IRD has been handling these claims and tax deduction. We project that the government will receive $164 million less per year. We have prepared several examples, and I will give the floor to Ms. Michelle Chan, Deputy Commissioner of Inland Revenue, to give you more details. Commercial and industrial building and structures before the period of the year of assessment 1965 to 66, the limit is 25 years. 50 years. Let me give you an example. When property owner A constructs a commercial building at the cost of $150 million and sells the building to property owner B at $150 million on the 1st of April 2020, the balance is $90 million minus the proceeds of sale, $150 million. There's a clawback mechanism. So it's like we didn't give the annual allowance. We use $150 million to calculate the tax deduction amount. We consider the balance of the the remainder of the usage period to calculate the amount, and that is $10 million per year. We can see from this example that whether this bill is passed, considering the time of sale of the building, the annual allowance is still calculated according to the existing tax mechanism. Because of the clawback mechanism, the property owner will not enjoy more than once the tax and allowance. Let us turn to the second example. The property owner constructs an industrial building at the cost of $150 million. The industrial building starts to be used in April 1995. On the 1st of April 2020, the industrial building is sold to property owner D at the cost of $150 million. The building has been used for 25 years upon the sale, and the $150 million tax allowances have already been used. As the building is sold at the cost of $150 million, there will be the clawback mechanism having been activated, as the building has already been used throughout the entire usage period. The remainder of the expenditure is $150 million, and the owner is still not eligible to receive the annual allowance, but subject to the passage of the bill. Starting from the year of assessment 2024 to 25, the property owner will receive an annual allowance. There will be a 4% applied to $150 million that is equal to $60 million per year. The third example, property owner E constructs a commercial building at the cost of $150 million. The commercial building starts to be used in April 2009. Property owner E sells the building to property owner F at the cost of $150 million on the 1st of April 2024. The property has already been used for 15 years, and the property owner enjoys an annual allowance of $90 million. So the proceeds of sale is larger than the remainder. Under the clawback mechanism, the clawback mechanism will be activated. According to the existing mechanism, the remainder of the usage period is 10 years. $150 million divided by 10 years, that is $50 million per year. Upon the passage of the bill, property owner F enjoys $150 million times 4%, that is $6 million. And I will now move on to example 4. If the proceeds from sale is less than the residual amount, how will the allowance be calculated? Let us take a look at the example. Property owner E constructed a commercial building at the cost of $150 million. The building started to be used in April 2009. On the 1st of April 2024, the commercial building was sold to property owner F at the cost of $50 million. The building has been used for 15 years, so the amount of annual allowance is $90 million minus the proceeds from sale. There will be a balancing allowance of $10 million. If the construction cost has not been deducted, it will then be deducted. The remaining amount is $50 million. And it will be apportioned in the remaining year of assessments, that is $5 million per year. Upon the passage of the bill, property owner F can enjoy $50 million times 4. That is $2 million.
嚇，多謝主席。
係
That's all for my presentation. Thank you. And any supplement by the PS? Well, I think we'll stop here for now, and we welcome questions from members. I'll now open up the floor to colleagues to ask questions. Well, in order to handle the time better, I'll first give you each 5 minutes for question and answer. First to speak, Ms. Doreen Kong. Thank you. Thank you. I'd like to go back to example 3 and 4. I have a couple of questions. Can we go back to example 3 and 4, please? I'll just like to clarify. Are you referring to example 3? Yes. Chairman, I'd like to ask about the bottom, that owner F will be able to receive annual allowance for how many years in total? Well, for the 4%, we're talking about 25 years. Regardless of when the property is purchased and how old the property is, under example 3 and 4, the owner will be able to claim annual allowance for 25 years, a maximum of 25 years. What do you mean by a maximum of 25 years? Can you explain this further? Ms. Chan. I just want to know how many years the owner will be entitled to the allowance. With the passage of the bill, 150 million at 4% annually. So, or after the 150 million is deducted, then the owner will not be able to claim further. Oh, yes. So you would receive further deduction for a maximum limit of 25 years. P.S. Yes, currently, I can now take up the construction cost with 25 years as a maximum limit. So that means a deduction of 4% annually. Well, under the current provision, the taxpayer can only claim for 25 years, after which the owner will not be entitled to other allowances. With the passage of the bill, claims remain unchanged. Let's say the balance remains the same, but the claim subject to a maximum limit of 25 years is removed. That means that if a new owner purchases the property or the building, then the owner will be able to claim a maximum of 4% for 25 years. And so there will be a flexibility for the new owner to make claims. That even though the previous owner has already claimed for 25 years, the new owner will still be able to enjoy this allowance. Ms. Kong. Here, for owner F, when you calculate the 150 million, you're going to also add in the balance of the tax. So are you going to give back 90% to the new owner? Well, because a lot of it is pending business decisions. Let's say 80% is returned to the previous owner, owner E. Then how would the calculation be? Ms. Chan, let me supplement. Well, this balance is actually based on the current calculations. It's sort of like a clawback mechanism. Let's say, we're talking about 60 million, but then the sales price is over 60 million. It's 150 million. So the balance, tax balance would be 90 million. So that's according to the IRO, and that would also be put in the year of assessment. And both sides will need to agree to set an amount. Thank you. Well, this involves accounting principles. Ms. Chen or PS, when you make explanations, please provide a bit more of a background. Mr. Benson, look, please. Thank you, Chairman. Well, we're now trying to rejuvenate the economy. The government has come up with this follow-up mechanism so that there would be tax deduction for expenses, which could then alleviate the burden on SMEs. There is a detail I would like the administration to clarify. That the reinstatement cost could be subject to tax deduction based on reasonable reasons. Well, let's say it's a restaurant. It's very difficult to sort of estimate the reinstatement cost because of the different sort of partitions in restaurants. There may be lots of different reasons. So how do you actually interpret the reasonable in the circumstances? Do you have some sort of standards for that? A second question is on the removal of the time limit for claiming annual allowances in respect of a commercial or industrial building or structure. Would the administration have an estimate on what impact it would have on the trade or on old buildings? PS. First of all, on the reinstatement costs, your understanding is correct. For different industries, and based on the different reinstatement requirements, there would be a huge discrepancy in reinstatement costs. The IRD would base on existing principles that when there is doubt, an investigation would be made. The claimant would need to provide proof on such reinstatement costs and to show that the cost is reasonable. The IRD would take this from the perspective of risk management. We cannot investigate in detail each case. We are not going to seek proof from every case. We would just try to manage the risk ourselves. When the IRD has reasonable doubt that there may be an exaggeration of cost, or there is a huge discrepancy from reasonable costs, then the IRD will follow up. As to the second question on the removal of the time limit for claiming annual allowances in respect of a commercial, industrial building or structure, that one is not capped at 24 hours, whether it would stimulate sales, we actually do not have an estimate because we have no control over the property market as it is subject to various circumstances. However, we do know that with the relaxation in provisions, purchases of buildings over 25 years could continue to enjoy annual allowances, and with this flexibility, it may be more attractive to buyers. Well, we are not sure whether more transactions would be stimulated because of this, but that would be a consideration for potential buyers in their purchase of older buildings. Thank you. Mr. Andrew Lam. Thank you, Chairman. I also want to clarify my understanding. Well, if I can clear up my doubts right now, then we wouldn't have to go through all these questions again during the clause-by-clause scrutiny. For leases, it may not be completed buildings. Some people may lease out a parcel of land and then build something or a building on top of that. Regardless of the length of the lease, this building would be subject to this bill. I would like to clarify this first point to see if my understanding is correct. P.S. So what I mean to say that for sites in new territories, the government may lease it out for 5 years or 7 years, and then a building can be erected on that piece of farmland. And that would also be subject to the same provisions under the bill. So that's my first question. Can you explain what you mean by buildings? Your understanding of the meaning of buildings is correct. Let me give you an example. Let's say a taxpayer leases a short-term car park. Well, it might be a private piece of land or government-owned land. Let's say he erected some railing of some sort, and that may be essential cost to running a car park. If the temporary car park is suspended when the lease expires, and then these guard posts or railings, when they are removed, could also enjoy this tax deduction for expenses. All right. Reinstatement is usually done when the lease expires. Well, I see some references. First of all, the construction cost, and then second, I see the number 4%. Assuming I invested 1 million, I'll need to reinstate the premises after 5 years. And for those 5 years, I can actually claim allowance of 4% per year. Let's say the lease runs for 30 years. And the allowance is based on the construction cost. So am I understanding the 4% and the construction cost correctly?
Thank you, Chairman. I think Mr. Andrew Lam is talking about two issues. And indeed, this proposal concerns two sub-proposals for general tenancies. When the lessee needs to reinstate the premises upon the conclusion of the tenancy, say the demolition of structures, or to reinstate the premises to the original condition, that will be conducted by way of reimbursement. In other words, the actual amount spent. In accordance with the existing RLO, these expenses could not be deducted. However, upon the passage of the bill, this would be allowed. The amount of deduction would depend on the actual cost of the reinstatement concerned, and that is our first proposal. Regarding the second proposal, when some owners construct a commercial or industrial building and when the structures or buildings are for self-use, there is a tax deduction arrangement. That is, we take into account the construction cost that is to be divided by 25 years, subject to a maximum of 4% per annum. That is to reflect the construction cost spent by the property owner when the structure or building is first constructed. The premises are used as part of the businesses. So we take the construction cost at that time as a blueprint, and the amount of tax deduction is 4% of the construction cost per annum for a period of 25 years. Well, I have another question. Well, you can ask your question in one go. Thank you. Be it a piece of private land or public land, let's suppose an investment of $1 million for 5 years, but one doesn't know whether he or she could renew the tenancy after 5 years. So for the first 5 years, that person concerned can apply for tax deduction or part of the tax deduction. And if in the end the structure is removed and is reinstated, does one have the freedom to choose to apply for the tax deduction or apportionment? According to the bill, the amount used to reinstate the premises can be deducted. After 5 years, when the tenancy expires, the amount of tax deduction is subject to 4%, so not all of the amount. And upon the conclusion of the tenancy, we will make a balancing adjustment. That is to factor in the not yet deducted construction cost. Next member, Ms. Carmen Khan. Thank you, Chairman. I'd like to see if my understanding of the proposal is correct or not. Afterwards, I will ask questions. The first proposal helps existing tenants, that is, those who will have to pay profit tax. So in paragraphs 4 and 5, these paragraphs concern profits tax. For the requirement of reinstatement costs, they could not be deducted. Tax deduction is not allowed. However, subject to this bill, the reinstatement costs can be deducted. So one will have to pay less tax. This is a benefit of the policy as it provides convenience to enterprises and companies. Reinstatement costs are not low usually. For the 4 conditions reported by the Permanent Secretary, the obligation for the reinstatement is required in the contract. The other condition is the reinstatement costs to be claimed have been incurred, whether in full or in part. Sometimes we discuss with the property owner, we pay a certain amount in lieu of actual reinstatement of the premises. And the third requirement is the reinstatement costs to be claimed have been incurred. And the fourth one is the amount of the reinstatement costs claimed is reasonable in the circumstances. So what if one of the property owners says that, well, I like the renovation of the premises. You don't have to reinstate the premises. In other words, one party takes the money without having to reinstate the premises, so no actual reinstatement costs have been incurred. Is my understanding correct? Two scenarios. P.S. Anything to say? P.S. Thank you, Chairman. Thank you, Ms. Carmen Khan. Ms. Khan's understanding is broadly correct. Our original intent is to help enterprises when lessees finish a tenancy and has spent money on the reinstatement of the premises. Upon the passage of the bill, the IRD will consider such costs to be eligible tax deduction items, but the four conditions still have to be met. Ms. Khan's understanding is correct in the sense that if the reinstatement costs are not borne by the lessee, for example, in large shopping arcade, it is the property owner or the property management company that is responsible for the reinstatement of the premises. Then they will charge for the reinstatement of the costs. The reinstatement costs charged to the lessee by the property management company or the property owner will be considered an eligible tax deduction item. However, in the second example mentioned by Ms. Carmen Khan, the requirement of reinstatement is set out in the contract. It is imposed on the lessee. But for example, the old lessee operates a restaurant and the new lessee also operates a restaurant. So they don't want to demolish the existing renovation and can simply return the restaurant to the new lessee as the premises are. In this case, the first lessee or the property owner does not incur any reinstatement costs. In this situation, tax deduction is not allowed. We need to have actual reinstatement costs. In this scenario, nothing in relation to reinstatement has been incurred. Yes, so I can confirm my understanding. Thank you. In paragraph 7, the proposed tax deduction will apply to a year of assessment beginning on or after the 1st of April 2024. Does it date back to the date of reinstatement of the premises or the expiry or the conclusion of the tenancy? If I'm the lessee, which day should I use? Usually 60 days are given to the lessee to reinstate the premises after the conclusion of the tenancy. So what about this? Ms. Michelle Chan, Well, we actually use the date of the incurment of the reinstatement costs. Ms. Carmen Can, you can ask in the second round. Now, Ms. Doreen Kong. Thank you, Chairman. If the sale of the commercial or industrial building is purchased and sold as equity, does one still enjoy the deduction? In your example, does it only apply to the acquisition of the entire building or the entire piece of land? What about I just purchased 80% of the building or the land? Is it not applicable? The examples given by the IRD have to do with the entire block of the building. What if I only buy 80% of the building? Is it still applicable? P.S. or Michelle Chen. In relation to purchase of the building through equity, well, for the resale of the property by way of equity, one simply transfer the ownership of the equity instead of the possession of the building. So the second proposal the cap on the annual allowance does not apply to the situation you have just now given. In relation to the IRO, one needs to have an interest in the building or in the structure in order to be eligible to apply for the tax allowance. What if one buys 80% of the entire block of buildings, say a commercial building? I don't buy the store on the ground floor. I only buy 80% of the building. What about this case? Well, it doesn't mean one has to buy the entire block of the building before one is eligible to enjoy the tax allowance. When one buys one unit in the entire block of the building, one is still eligible to enjoy the tax allowance in relation to one unit of the entire block of the building. In the legislation, it sets out building. That's exactly why I asked this question. Well, we need to clarify this. It doesn't apply to the purchase of the entire block of the building. Well, Mr. Nkong, do you have another question? Yes. Can we see the PowerPoint slide? Can you put it up regarding reinstatement costs? Can you put up the slide in relation to reinstatement costs? Yes, the person claiming the deduction is lessee of the lease. Does it include licensee or sublessee? Does it include licensee, sublessee, sublicensee? Because the word lessee covers a wide scope. And sometimes the bank assumes the role of the lessee. Does it apply to these cases? Ms. Michelle Chan? Well, as long as one meets the definition or satisfy the definition of a lessee of the lease, then we allow the tax deduction to be enjoyed. For example, a sublessee also has the responsibility to reinstate the premises. Then, when reinstatement costs are incurred, we also allow the sublessee to enjoy the tax allowance. And for licensee, it is not a tenancy. So in this case, a licensee may not be able to enjoy the tax allowance. Licensee have restrictions as to the use of the property. A licensee may not be able to renovate the property per se. Or a licensee does not enjoy an exclusive right to use the property. So we think that the licensee may not have the obligation to reinstate the premises and one does not incur the reinstatement costs. Well, we do need to discuss this matter. We may be able to come to this in the part of clause-by-clause scrutiny, but I still allow Mr. Ring Kong to ask this question.
Chairman, I'd like to supplement. In Hong Kong, there is a lot of property lease that is through licensing. For example, data center. Many data centers are licensed out because there are certain restrictions. When the license expires, well, a license may just be as long as a lease. And when the license expires, there's also a reinstatement responsibility. I think that there are a lot of businesses and industries want to develop further. And many of their businesses are not via leases. Instead, they are through licenses. I just want to point out that we should actually relax this for licensees as well. P.S. Do you have any response to that? Thank you, Ms. Kong, for your question. Well, actually, the new provisions are quite relaxed because we hope to help leased premises in reducing their tax obligations. But if you look at the amendments made, we are not insisting that there be a physical contract before we recognize this as proof. We would, of course, consider the case for a taxpayer that is able to prove that it is a lease, and when the lease expires and that there is a reinstatement responsibility with cost, and if that is the case, then that would be subject to tax deduction under this bill. Thank you. Ms. Carmen Can. Thank you. The proposal in the second part is actually the removal of the time limit for claiming annual allowances in respect of a commercial, industrial building or structure, and that there is actually a 25-year or a 50-year limit, depending on whether the building is a commercial or an industrial building, or whether it was first used before the commencement of the basis period for the year of assessment 1965 or 66. And that commercial buildings can now be subject to a maximum limit of 25 years as well. My understanding of this policy is that for buildings over 25 years of age, there would be less of an incentive for a buyer, because by purchasing an older building, the purchaser will not be able to enjoy tax deduction. Therefore, we are making this proposal to provide more incentive for potential buyers of buildings over 25 years of age. I'd like to thank the administration for explaining the different scenarios. Different examples were raised. Some buildings were already over 25 years of age, and without making the amendment, then owners would not be able to enjoy the annual allowance even after 25 years. And that even if the previous owner has used up the 25 years of annual allowance, the new buyer could still be able to enjoy it. Can we now go back to the page on which example 4 is shown? Example 4. Well, the purchasing price at April 1st, 2024 is about 50 million. With the passage of the bill, the tax deduction will be less per year. It will be around 2 million per year for 25 years, and that will reach 50 million. So the maximum deduction would not exceed the purchase price. Am I understanding this correctly? The previous owner could use 150 million as the basis of calculation and can enjoy these years of tax deduction. And the remaining balance has nothing to do with the new buyer. The new buyer will enjoy 25 years of annual allowance starting from the purchase date. Am I understanding this correctly? And Ms. Khan's understanding is correct. This policy will help us provide an incentive for buyers to purchase old buildings. I am in support of this bill. Thank you. PS, do you have anything to add? Ms. Khan's understanding is correct. Under the new measure, there will be a higher purchasing incentive for older commercial or industrial buildings. It might stimulate transactions depending on various circumstances, but that is actually good news for potential buyers. Mr. Polter. Well, so if there's a lease, then a deduction can be claimed. I'm not quite understanding the wordings here because the wording state clearly lease. But when it is a license, because there is no clear definition of a lease at the current moment, how are you going to implement it? Because in principle, you are going to be more relaxed. Could you actually add in lease and licenses? Could you further clarify this point and understand that it needs to be reasonable? Or do you have actually a clear definition of reasonable? Let's say not more than a certain percentage of the existing lease. Could you actually make it clearer or not, and not give so much discretion to the administration? Can you provide us with a clearer guideline? PS, well, on the definition of the words, well, although we are going to move on to the clause-by-clause scrutiny soon, I do believe that is a very important policy issue that needs to be resolved. Thank you, Chairman. Thank you, Mr. Tse, for your questions. Is that actually a lease or a license? We are saying that it is an arrangement for leases. But when I addressed Ms. Kong's question, let's say the wording used is not a lease and that it is a licensing arrangement, but then the nature of the licensing is more of like a lease, and that with the expiration of the license, there is also a reinstatement responsibility on the side of the licensee. Under this amendment, we would also include this under our bill. Even if there is only a verbal agreement and proof can be provided to the IRD on the verbal agreement, we would also accept that as well. So that's why I'm saying that we are quite relaxed in the bill. And for being reasonable in the circumstances for tax deduction, the IRD would first handle the case before investigation. In other words, the IRD can, with discretion, request the lessee to provide proof or evidence when there is doubt on from the end of the IRD on whether it is reasonable. Then the IRD will request the claimant to provide further information, such as comparing, let's say, a premise of around 500 square feet in a mall on reasonable cost. Let's say it would be only around 5 million for reinstatement cost, and if the cost here is about 10 million, then the lessee will need to explain to the IRD why there is such a case. So the burden of proof would be on the lessee. When there is doubt on fraud, the IRD will be able to follow up accordingly. Well, I understand the IRD sometimes provide explanatory notes on how you interpret certain words. Well, if you could put all this explanation in writing, then we would be more assured. P.S. Well, when this bill is passed and we need to prepare more information, then we would provide more information. I think you should also make this clear in the second reading. Many of our colleagues have already asked about this, especially on definition, and this is very important policy issue. Ms. Doreen Kong, I'd like to follow up. P.S. In your answer, I think what you meant to say was whether it is really a lease in essence. Am I correct? When government leases out land, the government would also make licensing arrangements, such as for alfresco dining. Let's say I am a lessee. I lease out a premise, an indoor premise, and of course I could reinstate it afterwards. But then for the outdoor dining area, the government would lease this to me with a licensing agreement instead. From what I understand from the PS, we cannot rule out the possibility that the reinstatement cost could be subject to tax deduction indoors. But then for the outdoor area, because it is only a licensing arrangement, then the lessee would not be able to enjoy the tax deduction. So there may be a difference between the indoor and outdoor area. And that doesn't seem logical when you're really trying to help businesses. We cannot just think of restaurants or retail shops. Well, for underwater fiber optics, that would also be under a licensing arrangement. So when the license expires, would you also need to reinstate the underwater area thing?
That has to do with the definition of premises. PS, well, I will give the floor to Ms. Michelle Chen for the second question. For the first scenario, I can share my experience with you. For the Lands Department or the FEHD, indeed, when a restaurant occupies vacant land of a government, to conduct business in an open-air manner, one simply lays the tables and chairs on the vacant land. For non-operation hours, these tables and chairs shall be removed. They are simply a makeshift structure instead of a long-term structure, so to speak. Reinstatement costs have to do with the removal of structures, and that is a different story. For example, honestly, before the meeting, I didn't think about the underground optical fibers, and the IRD may have to consider the situation. Ms. Michelle Chan, there's no definition of premises in the law. According to dictionary, premises refer to venue where transactions of businesses take place, which include land, building. When it comes to underground, as far as I'm concerned, it will be counted as a place where businesses are conducted. The reinstatement costs will be allowed to be deducted. Ms. Carmen Khan, I've heard PS answer to Ms. Doreen Kong's question. This bill aims to handle capital nature costs. So what is capital asset? In paragraph 4, you also explain that the lessee enjoys an exclusive possession of a property. So in the case of a licensee may not enjoy an exclusive possession of a property. This bill handles someone who enjoys an exclusive possession of a property. For a licensee, he or she does not enjoy an exclusive possession. So licensee does enjoy deduction by other means. So it doesn't meet the requirement of a lease. Before the PS answers this question, I'd like to talk about the arrangements for the meeting. We focused on lease and its definition. I suggest after the PS answers Ms. Carmen Khan's question, we can start the clause-by-clause scrutiny right away. We'll come to definitions and we can move on to the next stage to start the clause-by-clause scrutiny. We'll handle definitions in the scrutiny of the bill. P.S. I'll give a general reply. I'll see if Michelle Chan has anything else to add. Be it a lease or a license or a right to use a property, we need to factor in the actual situation. We need to see if the lessee or the taxpayer in the context of the Inland Revenue Ordinance enjoys an exclusive possession of a property. If a place can be used by all persons, then the IRD has a reasonable doubt whether the agreement is a lease. One must be able to prove one has the right to use a piece of land or a property. Only then will we recognize the identity of the lessee under the lease. Ms. Michelle Chan, anything to add? To decide whether an expenditure is capital in nature or not, we need to consider the consequence of the expenditure. If there will be an asset from the capital expenditure which has a rather long usage period, in general that will be an asset that is of a capital nature. We don't consider whether it is a lease or a license when we decide whether expense is a capital nature. We see whether the benefits brought to the lessee, that is whether the benefits are enduring or not. If so, then the expenditure will be capital in nature. When I employ a worker and when I pay him or her wages, expenditure of this kind might not bring about enduring benefits. Then it is not capital in nature, it is operational in nature. It can be conducted. It can be deducted rather. From the perspective of the Inland Revenue Ordinance, if it is capital in nature, it could not be deducted. When we reach the stage of clause-by-clause scrutiny, we'll have time to scrutinize these clauses. As we may touch upon accounting, we may need to spend more time on scrutinizing the clauses. We will use CB Brackets 11506/2024. That is a marked up copy. I'll now ask PS or which colleague will take us through the scrutiny of the bill. I will ask Ms. Michelle Chan to take us through the bill. So from 0001. We'll now use the marked up copy. Blue bill, clause 1. Section 3. Let us go to the page 0001. Clause 3, subclause 1. Propose adding section 16 brackets 1 brackets GB. Despite section 17 reinstatement costs incurred for any premises under a lease, but only if all of the conditions specified in subsection 2K are met. Mr. Rincon, do you want to speak? Thank you, Chairman. Just now I also asked the definition for the word lease. Do we have or do we not have the definition for the word lease? In this part, I mean. Do we have a definition for the word lease? For lessee and lease, there is no definition under the IRO. In the bill, there is no definition either. So we'll refer to the general interpretation of this word. Well, I'm not sure if this is good or not. Under Cap 1, there's no definition for the word lease. If there is no definition under this bill either, or under this part either, it doesn't sound good. Ms. Chan? There is no definition for this word, but we can still incorporate flexibility in the execution of this ordinance. On our website or in explanatory documents, we can explain the definition of the word lease. Mr. Rincon, can the IRD explain to me? Just now, Mr. Paul Tse said we can use interpretation notes or practice notes to explain certain words. Yes, actually we did the same in the past. For the words lease or lessee, you didn't add the definition to the bill or to the ordinance. You only used supplementary guidance. Is that correct? Did it happen in the past? Yes, it did. We'll continue to use the marked up copy to go through the clauses of the bill. But we also have long title of the blue bill. Can the administration read out the long title? A bill to amend the Inland Revenue Ordinance to give effect to certain proposals in the budget introduced by the government for the 2024-25 financial year concerning the introduction of a tax deduction for reinstatement costs for premises under lease and the removal of the time limit for claiming annual allowances for commercial and industrial buildings and structures, and to provide for related matters. In the blue bill, Clause 1, the short title is, this bill is referred to as the Inland Revenue Amendment Tax Deduction for Leased Premises Reinstatement and Allowances for Buildings and Structures Ordinance 2024. In the blue bill, Clause 2, the Inland Revenue Ordinance Cap 112 is amended as set out in Parts 2 and 3.
Please take note that this explains the bill with the long title. And if there are no questions, let us go back to the marked up copy. Let us now turn to 0002 of the marked up copy. So this actually refers to clause 3 of the blue paper, adding in subsection 2K that the following conditions are specified for the purposes of subsection 1. A. The person claiming the deduction is a lessee of the lease. B. The person has a reinstatement obligation for the premises. C. The reinstatement costs do not relate to any provisions made under Hong Kong Financial Reporting Standard 16, leases as issued by the Hong Kong Institute of Certified Public Accountants and enforced from time to time, or any other similar accounting standards. And D, the amount of the reinstatement costs is reasonable in the circumstances. All right. Let us stop here. Mr. Andrew Lam. Thank you, Chairman. Well, reinstatement is something new. I want to further understand what you refer to by reasonable. Well, the PS said that you only need to claim for cost, and you would only follow up when there is doubt. Let me give you a scenario. Let's say the process is smooth, but sometimes there may be hindrances during the process. Well, sometimes there may be a 30% increase in the reinstatement cost. And when would you have reasonable doubt to investigate? Well, yes, but sometimes the works may be delayed, and that would give rise to cost. So how are you to understand that, Ms. Chan? The reasonable refers to each case. The IRD would consider whether the cost is reasonable. Well, how do we define reasonable? Well, it has to be individual transaction. It's not a connected transaction. And an amount is paid for the reinstatement, and that would be subject to the allowance for reinstatement cost. We would compare it with market prices to see whether it is reasonable. Well, let's say it is a connected transaction, that there is connection with the renovation worker. And the worker requests unreasonable cost, and then part of the cost is then rebated to the owner, then that would not be considered as reasonable. There will be no deduction to unreasonable cost. Ms. Doreen Kong, Chairman. I have a drafting proposal referring to D. The amount of the reinstatement cost is reasonable in the circumstances. Reasonable in the circumstances has appeared many times in IRO. Well, but reasonable to whom? Can we actually draw reference from 16 EC in the IRO? In 16 EC, under the IRO, it's written quite clearly that as long as it is deemed reasonable by the commissioner, then that would be enough. Well, because we don't know who it is reasonable, or is it clarified in the beginning? Otherwise, could you actually add in or actually amend it to how it is written under 16EC under the IRO? DS. Well, we are very clear in that the discretion lies with the IRD. We are very clear on that. As to whether we need to clarify here it in writing, do we have any supplement from the IRD? Well, actually, the IRD would actually be assessing the tax assessable, and so must consider 16(1) under IRO for deduction. The IRD, of course, would need to consider which part of the cost could be deductible and to see whether such costs are reasonable. We do not believe that, therefore, that we need to make it clear who will be responsible for interpreting it. For tax deduction for leased premises and for tax deduction for income tax, we don't make it clear who will be responsible for deeming it reasonable. Well, I'm just trying to help because 16EC also talks about tax deduction. For the same ordinance, some clauses are quite clear in saying that the commissioner of the IRD could deem something reasonable. And this is also under Section 16. You actually also put up 4 conditions specified for the purposes of this section. Shouldn't you make this clearer? 16EC already states this quite clearly. Well, this is a drafting proposal. Could Ms. Chan tell us whether you make it clear that the assessor is responsible for such discretion, or that in other sections and clauses you don't clarify it? Can you try to explain it? Let me try to explain it this way. 16EC differs from this section, even though both are related to tax deductions. This one is a bit more regulated because proof must be shown. Or a reasonable person, referring to the assessor, would deem it reasonable in the circumstances. And of course, the claimant could appeal if he or she does not agree with the assessment. 16EC differs because it refers to intellectual property rights or the purchase of IR rights. That's a anti-tax evasion provision. If the commissioner believes it unreasonable, then tax deduction would not be offered. I note that Ms. Kong has made this drafting proposal. P.S. How about you bring this back and consider whether the drafting could be improved? You could think about it first. Let us first move on to the other parts. Let us continue with the marked up copy. Legal advisor. Thank you, Chairman. On the proposed 2K on whether the reinstatement cost is reasonable, we have also sent out a letter asking whether tax deductions could be made if deemed reasonable. You can refer to the response given by the administration, CB bracket 11527/2024 bracket 01. We have asked the administration to clarify that if the reasonable part could be subject to tax deduction on whether it could be made clearer in the provisions. PS or Ms. Chan? PS. Thank you, Chairman. In our response, we said the assessors, when they believe that part of it is unreasonable, then it would not be tax deductible. Deduction will only be allowed for the part that is considered reasonable. A new section 16(1) assess the reasonableness of the amount of reinstatement costs claimed. The assessor will look at the reasonable circumstances, and the unreasonable part would not be tax deductible. All right, that is clear. Ms. Chan, please continue. We can now move on to 0003. Which is in under clause 3 of the blue bill. Definitions have been added in. So the punctuation has been amended here and then in section 4, which is under section 16 bracket 3, some definitions have been added, including original condition. In relation to any premises under lease means the condition the premises are in at the beginning of the term of the lease. And then the reinstatement obligation means an obligation to reinstate the premises to their original condition at the end of the term of the lease or on an early termination of the lease. The obligation can be expressed or implied and can arise from the lease or from another agreement between the lessor and lessee of the lease. Another definition is a reinstatement cost. Means the cost of reinstating the premises to their original condition at the end of the term of the lease or on an early termination of the lease. And this includes any amount paid or payable by a lessee of the lease or lessor of the lease in order to discharge a lessee's reinstatement obligation for the premises.
唔准就係好，唔該江永科。
Mr. Kong, you've pressed a button. Yes, thank you, Chairman. I have some questions regarding reinstatement obligation. Well, I'd like to first ask about original condition. Sometimes the property owner agrees that upon the conclusion of the lease, then there could be changes. There could be economic condition changing. Original condition in relation to any premises under a lease means the condition the premises are in at the beginning of the term of the lease. So sometimes we don't always have to restore the premises to its original condition. In all of the leases, there is such a clause that where there is consent from the property owner, we don't have to reinstate the premises. So does it mean that there is no reinstatement obligation? And that is common in commercial buildings. The two parties to the lease can agree on this. They don't have to necessarily reinstate the premises. For reinstatement obligation, in relation to any premises under a lease means an obligation to reinstate or pay for the reinstatement of the premises to the original condition at the end of the term of the lease or on an early termination of the lease. Just now, in reading out the Chinese version, probably I missed it. You said whether in full or in part while you were explaining reinstatement obligation. So why I didn't see this definition in the English text? Well, whether in full or in part. This phrase is within the brackets. It's inside the brackets. The first question, yes, it's worth looking into the first question. For original condition, as Mr. Kong said, you need to reinstate the premises to the original condition or nothing else inside the premises, or can we still leave some tables and chairs in the premises? If so, is it still reinstatement? Sometimes property owners discuss with the tenants. Thank you, Chairman. Thank you, Mr. Kong. From our perspective, we set these four conditions to provide objective criteria. That is what kind of reinstatement expenditure can be tax deducted. For the four conditions we have set, we allow flexibility. Just now, Mr. Kong mentioned a very good point. What if the property owner says you don't have to reinstate the premises to its original condition? Say the next lessee is still going to operate a restaurant, so you don't have to reinstate the premises to the original condition. Well, one of the conditions is the reinstatement costs. If the reinstatement costs are smaller than the original reinstatement costs, well, that will be pleasing to all parties. But what if the lessee is asked by the property owner to do more than originally required? Say, if the lease requests you to reinstate the premises to its original condition, it costs some $1 million perhaps, but afterwards, in private, there is a new agreement. We need to spend $2 million renovating the premises, not just restoring it to its original condition. Then we won't accept the unnecessary amount. That is $1 million in this case. We need to take into account the actual reinstatement costs and whether such costs are reasonable. I thank the PS for his answer. For the 4 conditions B, that is, the person claiming the deduction has an obligation to reinstate the premises. But anyway I slice it, I still see reinstatement of the premises under the lease to their original condition at the end of the lease term. P.S. You mentioned you are less strict with it, you allow flexibility. However, in the legislation, I still see the reinstatement of the premises to their original condition. I thank P.S. for being quite lax in this regard, but while I am scrutinizing the clause of the bill, it doesn't mean so. Then probably I'm not being wholly responsible. Let's look at the definition for reinstatement costs. B includes any amount paid or payable by a lessee of the lease to the lessor of the lease in order to discharge the lessee's reinstatement obligation for the premises. It's very clear right here. By the lessee of the lease to the lessor of the lease. One doesn't pay the lessor, one pays the next lessee of the premises. One pays the next lessee instead of the lessor. So it doesn't meet the requirement of reinstatement costs. So in this case, one cannot claim the tax deduction. Is that correct? P.S. Thank you, Mr. Rincon, for the scenario. If I understand the scenario correctly, the original lessee indeed cannot claim the reinstatement costs. Say lessee A rents from the lessor a premises as the restaurant. Before the lease expires, the lessee finds a new lessee with the consent from the lessor. Then the new lessee continues to operate the restaurant, and then the reinstatement obligation falls on the next lessee. And the original lessee, that is lessee A, doesn't spend anything whatsoever on reinstatement. And when the original lessor agrees that the lease is signed with lessee B, that is a new lessee, and a new lessee will take the responsibility for the reinstatement of the premises. Then the original lessee, that is lessee A, does not assume the responsibility for reinstatement, and hence one doesn't have the right to claim reinstatement costs. So what if the renovation is not ordinary renovation? So you won't encourage transfer of business. If I'm a lessee, I want to deduct the sizable amount of renovation, say is a Chinese restaurant. I won't transfer the ownership of business to you. I simply reinstate the original condition. I dismantle all the renovations. The next lessee will have to pay a higher amount to the original lessee in order to compensate for the loss that the original lessee has suffered. In this case, you aren't encouraging transfer of businesses. Do you understand? I understand your point, P.S. When it comes to businesses, it's common to see transfer of businesses. Then you aren't encouraging the transfer of businesses. The economy is not faring well right now. Yes, P.S. So what is your take on the situation? I thank Mr. Kong for your question. For the transfer of ownership of the business, the position of the IRD is whether the taxpayer or the lessee has the obligation to reinstate the premises, and in the end whether they have spent on the reinstatement of the premises. If so, we will definitely accept their claim for tax deduction. However, in society, in the transfer of businesses, when lessee A sells the ownership of the businesses to lessee B, it's a commercial decision for the next lessee, that is lessee B, whether to accept the renovations or the installations inside the structure from lessee A. And as long as the lessee is a tenant, then the lessee does have the reinstatement obligation. And when the lessee has spent on reinstating the premises, then this lessee has the right to claim reinstatement costs to be deducted. The IRD accepts any claim for deduction when somebody has indeed spent money on reinstating the premises alongside his or her reinstatement obligation. Ms. Carmen can also press a button. Ms. Carmen can. Thank you, Chairman. Well, PS has already explained. I'd like to ride on Mr. Kong's question. Lessee A has received money from lessee B when lessee A transfers the business to lessee B. Then lessee A cannot claim tax deduction as a result of the reinstatement costs. Another situation which is more complicated, what if lessee A has received the money and the money has to be paid to the property owner? In this case, then one can apply for tax deduction, and the crux is whether the lessee has to pay to the lessor. When lessee A needs to pay to the lessor after transferring the ownership of the businesses, then lessee A may be able to apply for a tax deduction. Because to lessee A, the lessee A receives the money instead of having to pay the money. Reinstatement obligation also includes paying the installment costs. The Chinese version and the English version is different in order. It's not that easy to read the texts. In the fourth line of reinstatement obligation, that is, in the fifth line of reinstatement obligation, whether in full or in part of the English version. Very clear. Thank you. Mr. Kong. Thank you, Chairman. I'd like to seek clarification from the IRD for the purpose of the record. B under reinstatement costs, amount paid or payable by a lessee of the lease to the lessor of the lease when one has already taken back the premises. Is that included? Yes. If members have no question, Ms. Michelle Chan, let's move on to 0004.
4頁啦嚇，就係呢個建呢個
Page 4 adds in section 16 bracket 5D that the amendments made to this section only apply to year of assessment beginning on or after April 1st, 2024. All right, if there are no questions, let us move on to 0005. So this is amendment made to section 33A. That the sales that place in that the building structure mentioned in subsection bracket 1 is sold to the person in the basis period, and that it takes place in the pre-2024 basis period. And there is some editing on the English version. In the blue bill under clause 4 and 5, it is actually an amendment made to section 33A that if the interest in the building or structure mentioned that is sold to the person in that subsection in the basis period for year of assessment before the year of assessment beginning on April 1st, 2084. That this would be the same for the sale that takes place in a pre-2024 basis period. And clause 6, adding in 33 bracket 2A, stating that if the interest in the building or structure is sold for a year of assessment beginning on or after April 1st, 2024, then the annual allowance is to be an amount equal to 4% of the residue of expenditure immediately after the sale, and so on for any subsequent sale. We might have to stop here because I see that Ms. Kong wishes to speak. I also have a couple of questions. Ms. Doreen Kong, thank you. Well, it came to me yesterday that for industrial buildings, now I'm transitioning to becoming commercial buildings. So how do you define it now as a commercial building instead of an industrial building? Well, that's under IRO clause 40. It's up to the use of the building. Or for warehouses, that would be considered industrial buildings. For offices, retail, then that would be considered as commercial buildings. Well, if there has been changes to the structure, well, it might actually be the same. But for pre-2024, let's say when the purchase was made, it was an industrial building, but then the nature of use was then changed to being a commercial building. So when would you consider it as a commercial building? P.S. Well, from these new amendments, it will become more simple in the future, whether it be commercial or industrial buildings. The IRD would just look at the original construction cost, and then there would be a maximum claim for 25 years for annual allowance. Therefore, it doesn't matter what kind of building it is under the amendment. That means there is no difference between an industrial or commercial building. Yes, you're correct. When the bill passes, starting from the year of assessment 2024-2025, the annual allowance would be calculated as 4% of the residue of expenditure. Mr. Andrew Lam. Thank you, Chairman. Well, I understand that there will be no difference between commercial and industrial buildings. There might be changes to the original construction cost with a change in structure. When a structure is changed, or would that be considered as an original construction cost? That could also be subject to a tax deduction. Any questions in relation to this? Ms. Chan, please continue to 0006 since there are no other questions. Well, there are no amendments on that page. We now move on to 0007. So there is an amendment made to Clause 34 that when it is to be sold, then we will need to subject to the calculation under paragraphs B, BA, and BB. Clause 5(4) in the blue bill, there is also some sort of editing made to the text. Or please continue to 0008 because you might need to explain further the paragraphs B, BA, and BB. So that is Clause 5, Section 3. So that is on amendment made to 34(2)B, that the building or structure mentioned in paragraph A is sold to the person mentioned in that paragraph in the basis period for a year of assessment before the year of assessment beginning on April 1st, 2024. That will be considered as the pre-2024 basis period. And that the annual allowance will be computed by reference to the residue of expenditure immediately after the sale. All right, so we're still using the, we're still drawing the line at April 1st, 2024. Yes. Section 4 in the English, also some sort of editing amendment. And in Section 5, the 1965 refers to the 1965 basis period because that would actually involve more than 1 year of assessment. That is why we're now defining it solely as 1965 basis period for easy understanding. Currently, 34(2)(B) on the interest in the building or structure we are also capping the year and so on for any subsequent sale that takes place in a pre-2024 basis period. So that would be defined under Section 34 bracket 2B. And we're adding in paragraph BA in Section 34 bracket 2B, stating that if the interest of the building or structure mentioned in paragraph A is sold to the person mentioned in the basis period for a year of assessment after the capped year and before the year of assessment beginning of April 1st, 2024, then there can be an enjoyment of an annual allowance in the year 2024, 2025 year and any year of assessment after. That is to be an amount equal to 4% of the residue of expenditure. Mr. Andrew Lam. We are now at 34 bracket 2 bracket B. Am I correct? Yes, the bracket BA, we are referring to marked up copy page 8. The contents are under bracket BA. All right, I'll ask my question later. Oh, the Chinese sounds a bit complicated, so please read through this very carefully. Ms. Carmen Khan. Can we try to be more colloquial in our explanation? I'm trying to understand that for the addition paragraphs such as bracket BA and capping the year and the pre-2024 basis period referring to the year of assessment before April 1st, 2024. Can you try to explain it in more simple terms? So are we talking about sales after April 1st, 2024, or whether the tax deduction will be allowed even for purchases before April 1st of 2024? Can you explain it in layman terms? Because the general public would find it difficult to understand. As Ms. Khan said, we're drawing the line at the year of assessment 2024-2025. So for transaction sales before that, then we would use the existing provisions. But then for transaction after the 2024-2025 year of assessment, then that would be 4% of the residue of expenditure. So when we pass the bill, starting from the year of assessment beginning on or after April 1st, 2024, those transactions would then be able to enjoy this removal of time limit on annual allowance. But then let's say you made a transaction on March 31st, 2024, then you would not be subject to this tax time limit. All right, I'm going to extend the meeting by 15 minutes. We are going to complete the clause-by-clause scrutiny very soon because there are only 2 more pages. So I'm going to extend the meeting by 15 minutes. I think I understand Ms. Khan's explanation. I'm sure you also agree, Ms. Chen, that it is easier to understand. Can we take that as our understanding? For industrial buildings, the usage period may have already maxed before 2024, and the buyer, due to the max time limit, would not be able to claim annual allowance. But with the amendment, starting from the year of assessment 2024 to 2025, there would still be another 25 years for annual allowance.
I think I understand. I'd like to add one point, however. Writing on Ms. Carmen Khan's point, we understand it as long as the transaction is conducted after the 1st of April 2024. Upon the passage of the bill, deductions are possible, whereas they used to be not possible in the past before the passage of the bill. Mr. Carmen Khan? Well, after the explanation by the Deputy Commissioner, I'm none the wiser. Well, you can refer to paragraph 10 of the Legislative Council brief.
第10段好，第10段我哋睇緊嘅係
Paragraph 10, yes. Paragraph 10, brackets B, brackets 1. An industrial building or structure with an expired usage period is sold and used by the buyer in the basis period for a year of assessment before the year of assessment 2024 or 25. Starting from the year of assessment 2024 to 25, one enjoys an annual allowance. Well, I'd like to ask a question for the administration to clarify it. Based on what Ms. Michelle Chan has just now said, if a transaction took place in January 2024, probably back then I couldn't enjoy the tax allowance, but upon the passage of the bill, I can make an application to apply for tax deduction after the 1st of April 2024. Is that correct? Yes. Even if the transaction took place before the 1st of April 2024, you can still make an application after the 1st of April 2024 to enjoy tax allowance. Under brackets B, brackets 1, it is limited to industrial building or structure. In Roman character 2, well, you have to clarify this. For commercial or industrial building, the owner only enjoys tax allowance after 1998 or 1999. (1998-99) is the first year of the usage period of the commercial or industrial building. Upon the passage of the bill, then the buyer enjoys annual allowance, whereas for industrial building or structures, the first year can be earlier. It may be 1990, for instance. So in 2023 to 24, the usage period of 25 years has expired. So we allow buyers to enjoy annual allowance starting from 2024 to 25. Well, probably I can put it this way to make it easier for members to understand. The 1st of April 2024 is the start date of the policy. Even if a transaction took place before this year, you couldn't claim the tax allowance, but upon the passage of this bill, after the 1st of April 2024, you can still make an application to enjoy tax allowance. Did I make it easier for members to understand this point? P.S. Well, Chairman, your interpretation is absolutely correct. We can take the 1st of April 2024 as the starting point of a new policy. It's the date on which the new policy takes effect. Construction cost deduction period for a maximum of 25 years. This limit is removed, so there is no limit on the time limit. So one can enjoy the latest arrangements in relation to tax allowance. Ms. Carmen Khan is meticulous. Any difference between industrial buildings and commercial buildings? Well, the arrangements are actually the same. The starting point for the 25-year period to get started is different. It's good that we introduced this policy. When we take a look at footnote number 7, that is footnote number 6 in the English text. If we hadn't introduced this bill, people could not make an application for tax allowance. But after we have introduced this bill, subject to the passage of the bill, people can make an application for tax allowance after the 1st of April 2024. Many buildings have gone past the 25-year mark. Whoever the buyer, if one still has the balance for deduction, one can continue to enjoy the allowance. Thank you, P.S. Dorian Kong. Ms. Dorian Kong has pressed the button. Well, Chairman, I don't have a question, but I'd like to point out I have read the legislation many times before I understood the legislation. While tax legislation is subject to change, I understand this. Tax rate and different methods to calculate tax, yes, I do understand there may be changes. But I already pointed out to the administration that the Inland Revenue Ordinance is very complicated. I suggest that the IRD consider when there are new amendments in the future, can you draft the provisions, can you draft the bill better? Income Tax Act 1947 in Singapore. 14Q, it's also about deduction. They make annual amendments. 2021, 2022, they make amendments and they list the method for calculating tax very clearly in 2021 and 2022. And this is better than our existing practice. I understand the papers, but I had to read it time and again. The budget every year may cause a change in the tax rates and the IRO as a result. We spent a long time making the provisions understandable by laymen. Ms. Carmen Khan? Yes, we understand it now. After rounds and rounds of discussion, we understand the provisions. For older industrial buildings, say after 1965 to 66, 25-year period, before the year 2000, the building had already reached the 25-year mark. But upon the passage of the bill, after the 1st of April 2024, one can apply for tax allowance. But you also made it clear in the information papers that the building or structure has to be self-use. Where can we see such provisions in the bill? Did you reflect it in the bill? Yes.
睇翻B 嗰段係啊008頁啦嚇。
Page 0008, marked up copy 0008.
應該係第 A 段係啦，應該第七mark up copy 嘅
Marked up copy page 7. Annual allowance. We only grant annual allowances if the expenditure is for the business. Section 34, brackets 1.
(34) 第一款啦嚇，咁咧若果係
Section 34, brackets 1. If I'm referring to Section 34, brackets 1. We grant initial allowance. If one still owns the structure or the building, that is Section 34, brackets 2A, we still grant annual allowance. In other words, one needs to use the building or structure for business. Only then will we grant the annual allowance. Moving on to 0009. Is that correct, Ms. Michelle Chan?
BB 條係啦，
BB
係啦，咁就條例咧係就對呢個現行嘅第三
Section 34, brackets 2B, add brackets BB. If the building or structure is sold after the year of assessment 2024 to 25, then the buyer can enjoy tax allowance. Then the annual allowance in any year of assessment, the basis period for which ends after the time of the sale, is to be an amount equal to 4% of the residual of expenditure immediately after the sale. Mr. Andrew Lam. On this page, I see the phrase for the first time. 16F, brackets 4, brackets B, you didn't use the same words. The words used in English is first use substantially. Contextually, I assume both of these mean the same, unless otherwise. We need to be clear. If these two mean the same, but the drafting is different, there is no interpretation. Will it give rise to any concerns, any doubts? If it gives rise to any doubts, can we use the same drafting, or can you include the interpretation right here? Yes, in relation to the phrase first use. Ms. Michelle Chan. This phrase actually exists in the existing tax legislation. From the first year when the building is used, we then calculate 25 years.
I understand that you have been using this. I'm just saying that under the same ordinance, but with different wordings in 15, would that actually give rise to concern in the future? If the meaning is the same, would you actually just try to make the wordings consistent? I understand that Ms. Doreen Kong has also raised this concern, not on the same page, but in some other sections under the IRO. The meaning seems to be the same, but the wording used does not show consistency. This issue has already been brought up. PS, do you want to speak on that? We agree with Mr. Lam. But under this scenario, I'll discuss this with the DOJ to see where there is an absolute necessity to make this change. We can raise it with an absolute necessity. However, if we believe that there is no need to do that, we would also respond to members. I'd like to extend the meeting by a few more minutes because I believe that we can complete it very soon. There are some drafting suggestions brought up today. I hope that the PS will bring it back to the DOJ. Can we now move on to the last page, 0010. This is to provide a definition for capped year. For those before the 1965 basis period, when the building or structure was first used, then the capped year would be the 50th year of assessment. And for building or structure first used after 1965 basis period, then the capped year would be 25. So you continue to use the term initial use. Any questions? Ms. Chan, have we completed the clause-by-clause scrutiny? Yes. I'd like to thank all members. We have completed the clause-by-clause scrutiny. Legal advisor, do we have other concerns? Thank you. There is no discrepancy between the Chinese and English version. Thank you. I have a bit of housekeeping to discuss with you. First, should we consider inviting public written submissions? I don't think we need to hold a hearing or consultation. I think written submissions will be adequate. Am I correct? All right. The Secretariat will invite the public to give written submissions, and it will be put online. As we have completed the clause-by-clause scrutiny, let me share with you the arrangements for resuming second reading. On December 6th, I'm going to submit my report to the House Committee. Proposed amendments deadline would be on December 9th. Can the administration on the last council meeting resume second reading on December 18th? Well, we hope to do so, Chairman. All right, so please take note of the timetable I have just shared with you. Lastly, I'd like to remind the administration that members have given valuable comments today. Please provide us with the necessary written responses. And we would resume second reading at Council meeting on December 18th. Since there is no other business, I now adjourn the meeting. Thank you.